Scott?
Wabner, how are you? Welcome to Halftime Report. It's good to see you again. I have a couple of questions for you. A rough last week, obviously, but an incredible end of the year. Obviously, it seems as though the Innovation Fund specifically is tracking the movement of the 10-year yield. First off, I mean, do you expect that that's the way it's just going to be for the foreseeable future?
I think algorithmic trading has taken us there, high-frequency trading. But at some point, we think we've been in very many markets. For example, 2017, when interest rates were moving up, our flagship strategy was up 85%. So algorithms have gotten a hold of the market, we think, in the last couple of years, increasingly. But if we are right, interest rates are going to continue down. We think we're moving into a period of deflation, prices actually falling, oil prices today being a good catalyst there. And we think interest rates, if you look at where the long-term Treasury ended up 5% in October, and you map that against the ratio of metal prices to gold prices, you know, they had been tracking, the correlation was very tight for the last, well, since 2009. And they parted company big time last year, 5%. That ratio would suggest that long-term Treasury yields should be down closer to 2%. Now, maybe the truth will be somewhere in between, but we do believe that long rates overshot and that they have and that they are on the way down.
I want to ask you about portfolio management, because I look at so many of your top 10 holdings are up just tremendous amounts over the last 3 months. Really, you know, the rally from the end of October to the end of the year took many of your stocks higher. And I know, you know, the Innovation Fund had its best month, I think, ever in November. But on that note, when you look at a Roku, for example, that's up 31% in a few months, or a UiPath 39, Block 56, Roblox 38, CRISPR 40, et cetera, you get my point. At what point do you look at those and say, I need to trim some of those positions? They've either gotten too large or the gains are just too big.
We have been trimming most of them. So, yes, that's portfolio management. So we do indeed take profits. And if you'll notice, last year, the group that lagged so badly was what we used to call our genomics group, the multiomics group, we now call it. Many people call it biotech, and so you saw us deploying some of those gains into the multiomic space, which is very relevant. J.P. Morgan conference on this week. We think there's going to be a lot of good news and a lot of catalysts.
Cathie, it's pretty well known, I'm just going back to Bitcoin here, that a lot of the old wirehouses still don't allow their clients to access Bitcoin. Do you think this spot Bitcoin ETF is going to make a difference? Will institutions become a little more accepting and willing to offer it to their clients, or is there still going to be a significant institutional barrier here?
I want to ask about Twilio.
No, actually, we think that the SEC approval, should we and others get it, is a green light for institutions. We've been talking to quite a few of them, and they're much more interested now that the SEC effectively is paving the way.
Briefly.
Joe?
Cathie, it's Joe. Real quick, wanted to ask you about the CEO change at Twilio. Does that give you any comfort, confidence, or do you look to move to the sidelines that they're not doing enough?
Well, we know there have been some activist investors involved, so this seems to be the outcome of that. We have believed that the sum of the parts is worth more than the whole. I think I checked this morning, it's selling at 2.5 times sales, roughly 15 times EBITDA. And we do believe that it should be one of the prime beneficiaries of the artificial intelligence breakthroughs that we're seeing, because it has so much proprietary data. And so we'll be watching carefully to make sure that they follow through on a lot of the AI promises that they made last year.